Here is a number that should scare you, not because it is big, but because of what it means. That is the current US national debt. And by itself, sure, big number, whatever. But here's the part nobody is telling you. In 2024, the US government paid over $1 trillion just in interest. Not paying down the debt, not building roads, not funding schools. For the first time in American history, interest payments crossed defense spending. And now, in early 2026, the yield on the 10-year Treasury is sitting higher than it was at the absolute worst point of the 2022 inflation crisis. That is not a recession signal. That is something older. Something that has ended empires before. And your 401k was built for a game that may no longer exist. Most people are preparing for a recession. Layoffs. Market dip. Tough year. Then recovery. That playbook makes sense, because every recession in modern history ended. 2001 ended. 2008 ended. Even 2020 ended in 18 months. A recession is a problem inside the economy. What is building right now is a problem with the economy itself. The rules underneath it. The foundation that everything else is standing on. Ray Dalio, founder of the world's largest hedge fund, spent years mapping how monetary systems die. He identified a specific set of signals. Right now, every single one of those signals is flashing red. And most people will not notice until it is too late to move. Think of the global financial system as one giant commercial lease. After World War II, the world signed a lease with the United States. The terms were simple. The US dollar would be the global reserve currency. Everyone trades oil, commodities, and debt in dollars. In return, the US maintains stable currency, keeps inflation low, and provides military security to keep trade routes open. That lease has been running for 80 years. But here's the problem with long leases. The landlord starts taking liberties, and the tenants start looking for other apartments. The first liberty came in 1971 when Nixon closed the gold window. From that moment, the dollar was backed by nothing except trust. For decades, that trust held. Because everyone needed dollars to buy oil. Because the US had the biggest economy, the strongest military. But trust is a psychological asset. And psychological assets erode when you abuse them. In 2022, the US froze Russia's dollar reserves. $300 billion gone overnight. Every other country on Earth watched that and asked one question. If it can happen to them, can it happen to us? They answered it. ACT2, the tenants are leaving. In 2023, China and Brazil settled $6.5 billion worth of oil trades in yuan, not dollars. Yuan. India started buying Russian oil and paying in rupees. Gulf nations, who have priced oil in dollars since the 1970s, are now openly discussing multi-currency pricing. And central banks? In 2024, they bought 1,037 tons of gold, the second highest year ever recorded. China, Russia, India, Turkey, buying gold not because it looks beautiful, but because they are quietly exiting the dollar lease. Now here is the psychology that matters. When the US weaponized the dollar, cut Russia off from SWIFT, it did not weaken Russia as much as it taught the world a lesson. If I can be removed from the payment system because someone dislikes my foreign policy, I will build a payment system that does not need them. And once that alternative exists, every country that is afraid of being next will start using it. That is not a conspiracy. That is incentives. It is the same psychology as a bank run. The bank does not fail because it is broke. It fails because enough people believe it might fail, and they all withdraw at once. That self-fulfilling prophecy is now playing out at a global scale. ACT3, meet David. Now, let us make this personal, because this is not just a geopolitics story.